Welcome to Byte-Sized Tech. You know how it is 1 minute you're keeping up with the latest phone, the next day there's a whole new language of AI and trade deals to decipher.
Yeah, it moves so fast. It can definitely feel like you need a decoder ring sometimes.
Totally. So for this deep dive, we're going to try and make sense of some of the big interconnected issues swirling around.
Like the U.S.-China trade stuff.
Exactly. The tensions there, how tariffs on tech goods might be shaking things up, and, well, what it all could mean for the tech we use, and maybe even AI development.
Right. We've been digging into quite a few different sources, trying to piece together the impacts on everything from AI to supply chains.
We have. We looked at a bunch of different angles to
Yeah.
try and bring some clarity.
It's a complex picture, for sure.
Let's go.
But we're focusing on what seems most significant.
Okay, so let's jump right in with something that definitely raised an eyebrow. This story about Meta in China.
Ah, yes, the whistleblower allegations.
Right, Sarah Williamson. Based on her experiences starting back in, 2017, she's made some pretty big claims.
Yeah, her prepared remarks suggested Meta's discussions with China actually helped their AI ambitions. She even framed it as a global arms race.
An arms race. Wow. What did you make of that, considering, the context?
Well, from her perspective, it sounds like these weren't just casual business talks.
Mm-hmm.
Her remarks imply a level of engagement she believes actively aided China's progress in AI, which is, a super strategic area.
Makes you think about what goes on behind the scenes in global tech, doesn't it?
Definitely, the less visible stuff.
And Meta's response, as expected, is basically, this is old news.
Yeah, they pointed back to Zuckerberg's comments from over a decade ago about wanting to operate there.
And Andy Stone was pretty clear. Facebook, Instagram, they're not available in China today, so
Yeah.
case closed.
Well, that's where Williamson's counterargument comes in, the one you highlighted.
The money.
Exactly. She points out that even without operating those services in China, Meta apparently generated around $18 billion in ad revenue from China last year.
$18 billion. Okay, so that kind of undercuts the old news thing.
Right. Her point is, this isn't some historical footnote. It's a very current, very substantial financial link.
So you've got this tension. Meta says, look at our current operations. Williamson says, look at the current money flow and its potential impact.
Precisely. Meta draws a line, but Williamson suggests these financial ties are maybe an ongoing form of indirect support for China's tech sector.
It really does show how tangled up the global digital economy is.
It does. It raises that question, in this super connected and competitive world, what are the responsibilities of these huge multinational tech firms? Where's the line?
Yeah, good question. Okay, let's pivot a bit. Let's talk about something maybe more immediate for people. Tariffs and tech supply chains.
Right, the disruptions.
We saw President Trump implement some pretty major tariffs, remember, including that huge 104% one on some Chinese goods.
And then China and the EU hit back with their own tariffs. It's like a global trade standoff.
Totally. And we're already seeing effects, right? Like that report about Amazon potentially canceling orders.
Yeah, apparently on specific Chinese-made electronics and household goods. It shows how fast companies are reacting to the uncertainty.
And the data. Wow. The U.S. Trade Commission figures show just how much we rely on China for key tech.
It's pretty stark.
Like 70% or more for laptops, PC monitors, gaming consoles. That's a lot.
It is a huge dependency. If those imports get hit hard by tariffs, what happens?
That's the worry, isn't it? Shortages. Big price jumps for everyday tech.
Could be. It definitely creates vulnerabilities, and it ties into the administration's goal, or stated goal, of bringing manufacturing back to the U.S.
Right. We heard the Commerce Secretary talking about that, bringing jobs back.
Mm-hmm.
But the market seems, confused. Is the main goal revenue from tariffs? Is it really about bringing manufacturing back or something else?
And the lack of high-level talks, diplomatic discussions since things escalated, that adds to the uncertainty.
Definitely feels like a missing piece.
And economically, tariffs that high, like 104%, they're probably going to reduce how much is imported, right?
Makes sense.
So even if the White House projected big revenue numbers, some analysis, like from Bloomberg Economics, suggests it might be closer to $300 billion a year. Still huge, but maybe half the initial projection.
Interesting. So the actual economic outcome might not match the initial goals or projections.
It raises that question. Are the policy aims lining up with the likely economic results?
Okay, so let's boil this down. What does it mean for, say, Apple or Microsoft and for us buying their stuff?
Well, for the tech companies, moving manufacturing back here means dealing with much higher U.S. wages.
Right. Labor costs.
That could definitely squeeze their profit margins, their earnings. Remember that Bank of America note?
The one about the iPhone.
Yeah, suggesting a U.S.-built iPhone could cost maybe 90% more.
90%, ouch. That makes you think twice about upgrading.
For sure. And it's not simple, just like packing up a factory and moving it.
No, the expert view we saw, the person from Microsoft's supply chain,
Mm-hmm.
they really stressed the complexity.
Exactly. It's not just the final assembly. It's the whole ecosystem, tier 2, tier 3 suppliers, materials, logistics, all built up over decades.
Rebuilding that whole network somewhere else, especially in the U.S. at that scale,
Mm-hmm.
it's a massive job. Takes time, lots of investment.
Which leads to that kind of weird advice companies are getting. Hurry up and wait.
Yeah, hurry up and figure out what to do, but wait to actually do it because things could change tomorrow.
Precisely. Make a big move too fast and the trade rules could shift again. Look at the Mexico-Canada dispute example.
Right, so companies are stuck between reacting now to tariffs and trying to plan for the long term, but the long term is totally fuzzy.
It's a huge balancing act, especially when you don't know how long tariffs will last or if a future administration might reverse course.
And everyone remembers the COVID supply chain mess, right? That fragility is probably fresh in their minds.
Absolutely. That's pushing companies to diversify anyway, to not rely so much on one place.
So short term, maybe companies just eat the tariff costs while they try to figure things out and maybe look at other countries.
That seems likely for many, yeah. Absorb costs, wait for clarity, explore alternatives in places less hit by tariffs. Companies with more diverse chains already have a bit more flexibility.
Okay, let's loop back to AI. We mentioned it earlier. How do these trade fights and tariffs potentially mess with U.S. AI ambitions?
Well, the concern is that tariffs could kind of indirectly force the U.S. AI industry to compete more on China's terms.
How so?
Okay, so the U.S. has tried to limit China's access to the most advanced chips, the GPUs, right?
Mm-hmm.
But a key U.S. advantage has been deploying way more computing power, just massive scale. If tariffs make building and running that infrastructure data centers power more expensive.
Then that advantage gets harder or slower to use.
Exactly. The cost goes up, slowing things down. Even if we have the best chip designs, if building the AI factories gets way more costly, it's a hurdle.
That makes sense.
And it could potentially push smaller U.S. startups towards a more efficient AI development, maybe like DeepSeek in China, getting good results without needing quite the colossal resources of, say, OpenAI.
Interesting. So cost pressure could force innovation and efficiency.
Could be. Necessity driving invention, yeah.
Yeah.
And remember, big tech's huge AI investments, we're talking hundreds of billions on data centers.
Yeah, like $350 billion projected.
Right. That depends on their main businesses staying super profitable. If trade issues and tariffs hit those core businesses,
Then maybe the AI spending slows down or doesn't go as far.
potentially, yeah. The scale or pace could be affected. It's all connected.
Man, it really is. These trade policies ripple out everywhere, even into cutting-edge AI. So what about investors? How are they handling all this mess? The market seems jumpy.
Oh, definitely volatile. You saw Amazon stock react to that order cancellation news, and Apple had that big drop in market cap after tariffs hit, including that really sharp one-day fall.
Yeah, worse since 2000 or something, though it recovered a bit.
Right. Shows the sensitivity. And people seem divided on when things might stabilize.
Watching earnings calls versus political news?
Yeah, some are waiting for companies to give clear guidance on the financial impact. Others are watching for any sign of political de-escalation on the trade front.
Makes sense. Either could calm things down, presumably.
Probably. Clearer signals on trade policy would help, but so would just knowing how companies are actually coping financially.
But even with all that uncertainty, some investors are still betting on big tech long term. Like 5-10 years out.
Yeah, citing their strong balance sheets, cash flow, that financial muscle provides some cushion in rough times.
And the whole buy the dip idea for stocks that seem oversold.
That's definitely happening too. For investors with that longer view, big drops in solid companies look like opportunities. And interestingly, remember that blip where PC shipments went up?
Oh yeah. Maybe companies stocking up before tariffs really bit.
Could be pre-buying inventory just in case.
So, okay, wrapping this up. We've covered a lot. Meta's China connections, both past dealings and current revenue, the supply chain chaos from tariffs, potential cost hikes for tech and for us, how it might even slow down AI, and how investors are trying to navigate it all.
It's definitely a tangled web. Highly dynamic, loads of uncertainty still, needs constant watching.
For sure. So Thinking about all these pieces, the supply chains, the costs, the AI race, the politics, what single thing, if you had to pick one, do you think will ultimately have the biggest impact on tech's future in this shifting global landscape? It's tough, I know.
That is tough. Gosh, I think maybe ultimately the biggest factor will be whether the major players, especially the US and China, can find some way back to more stable, predictable trade rules.
Predictability.
Yeah, because right now, this constant tension and uncertainty, it just creates drag on the whole system for everyone in tech. Finding some stability, even if it's a new normal, feels key.
Definitely food for thought. Okay, that's all the time we have. Thanks for tuning in to Byte-Sized Tech.
Great discussion.
If you enjoyed this deep dive, be sure to like, comment, share, and subscribe for more insightful tech discussions.